Stock market today analysis for November 10th, 2022, 6 p.m. Hawaiian Standard Time. My friends, I've been out of commission for a few days. You might hear it in my voice, but Monday I started feeling bad. Thursday, I'm not feeling as bad, not 100%, but I have enough energy to go over the market, which this is the first time I've looked at the markets since probably Monday. I've really been out of commission. So this video is going to be about getting myself caught back up to what has been going on, as well as potentially showing you how, if you learn how to sell some options in some way, shape, or form, you don't necessarily have to watch the markets with the eyes of the hawks. But look at this, Nasdaq up 7.35%, S&P 500 up 5.53%, U.S. Treasury 10-year yield down whopping 31.4 basis points, gold up 2.53%, Bitcoin up 14.56%, oil up 0.51%. As I've said on previous videos, these numbers might look great, they might look horrible, but when you, it's only in relationship to what? Yes, maybe being up 14% is great. But when you broke below that 19, when you fell below that 20,000, not looking so good. I did pay a little bit of attention. I saw big Bitcoin bite down at 15,000. Let's take a look at this earnings calendar. All right, this is a good one to check out because the quote unquote heavy hitters are capitalized here. So you can browse through there and see if your favorite stockolas are going to be announcing earnings. Or what you can do, get yourself a paper trading account and practice some strangles or some straddles during some earnings season. That's up to you, but you see it right here, stocktwits.com, earnings calendar. Check it out. You can find it somewhere else too. The VIX, look at this. VIX is going down. I think the last time I looked at the VIX, it was around like 24. Maybe it was over here. I don't know. That ramped up a little bit. It's down. The VIX is going lower. That means there's a segment of the market that feels like there's not fear in the market. Oh, look at this risk indicator. Dropped down lower a little bit too. Last time I looked at this, it was back here, up here in like around the 280s, high 280s. Now we're dropping down to the 250s. Let's take a look at those bonds. Hey, I'm making this video early enough to still get to see these bonds. Look at all these bond rates going down. Boom! Heavy. Some big percentage going down compared to what I remember looking at previously. Still in this high range though, right? 52-week range. Remember the last time I did make a video on Monday, but man, I couldn't find the energy to publish it. And so last time I looked Monday night, all these little blue things there, they were pushing to this end. So now we're moving down, but nonetheless, look we're still in that high range here. So until they're like halfway or down here, they're still up there. Let's take a look at what's going on in the markets. S&P 500. Look at that. Shot up today. Gapped up. Opened below this resistance, but closed above this resistance. Looking to the left, now we're back in this territory. Maybe we're gonna this is either gonna act as this sort of area right in here. It's gonna act as some support, and so we'll see how much, some resistance, and we'll see how much resistance that gives. Lots of volume. Look at that volume coming in. The technology sector, similar. Right? Forgot to look That's something here. Okay, over both of those moving averages, 50 in the technology sector. Okay, look at that, gapped up above the both of these moving averages, and closed above this kind of this area of support resistance area right in here. But again, it's got to stay above that. But and then with the healthcare, look at that too. It's got traded all the way to the bottom. So opened here sometime during the day, traded all the way down here, and buying pressure pushed it all the way up here. Got as high as there. If we wanted to see exactly how that unfolded, we can switch. We can switch this to, let's say, hourly, and then drop this down to, let's just go today. And this is looking at that candle in hour increments. So opened here, rallied up here, and then kind of went sideways because it went up a little more, but then it dropped down, kind of sort of right back to where it started, right? Kind of going sideways here, drop down, but look at that, right back here. So basically kind of going sideways here, even though there was a little wiggle room in that sideways movement, a lot to the downside. Came back up, and then had some not really powerful moves, but there were these moves. This one tested that to the upside, selling pressure pushed it down, but then it turned around. You got the selling pressure testing to the downside, and buying pressure pushed it up, and then it kind of just floated across to end here. I guess this is where it tried pushing up here, and you see this. This is a 20 time period moving average and 50 time period, not a full day since we're an hour, so it's 20-hour time period, something along those lines. And up day. So that's how you can take a deeper look inside of a particular candle that you're looking at to see what may or may not be going on with it. And that's what we see right here. Interesting, huh? Two totally different pictures, but ultimately it's the same price action. And wow, so now we closed above, opened and closed above this this resistance here. Maybe this is going to turn into support. This 135 area is going to be pretty telling, but obviously now it's above all three moving averages. Lots of volume in there. Financials, look at that. Financial sector, boom, gapped up above the 200-day moving average. It's on the top side of that 200-day moving average now, with looking like a strong candle to the upside. Consumer discretionary. Well, what the heck? You know, it's making a comeback. It's not as much of a powerful move as we see on those other ones. Okay, granted it's a gap up, but I'm looking at these three moving averages. You know, we got other things gapping up above moving averages, and this didn't even gap up above it, but at least it closed above it. Maybe a lot of people are just being very cautious with their discretionary spending right now. Industrials, right? Industrials, look at that. Boom, that's looking strong. Lots of volume. See that 20-day moving average curling up. See it gapping up there. We'll look over here to the left. Okay, it's going to probably be possibly hitting some resistance right in this area around 100. But if it starts kind of, you know, pushing and building like a little clustering there, could potentially continue to move up. And we got IWM, small mid-cap type of stocks. Boom, gaps up today over those 250 and 20-day moving average, pushing up against that 200-day. We see it hitting into this resistance area here, which we see kind of has happened in the past. But if everything else continues to go on as we see, then it's probably going to be breaking that. And the Qs. Hey, at least it gapped up above this 20-day moving average. Opened up below the 50, but closed strongly above that 50-day moving average. Look at that. That's pretty strong. I don't think there's, maybe just a little tad bit to the upside. Let's take a quick look here. So right here, see where it says high? Watch that when I hover over it. Okay, take a look right now. I know it's hard to read. 283.05. Close was 282. Yep, so it traded just a little bit higher. Pull back just a little bit. Just a tad bit. The dollar, I'm guessing the dollar's down. That's right, look at that. This sort of gave us a clue, right? Hindsight's 2020. This is a hindsight 2020 clue that it gave. Popped up here and have this weak, oh, we don't have enough energy to maintain it, and then drops down here. And look at that. Drop down, try to rally up here. Boom, falling hard. Now, just based on technicals, this should probably, let's go back at 1 year. Maybe that's not enough time. Could get caught in here, right? Just looking at technicals. But I think the dollar is a little more than just looking at the technical charts. I think there's other things that go on into it, like fiscal policy, monetary policy, maybe even something else. You should check out those big macroeconomic guys if you want to have a more enlightened idea to whatever that may be. Bonds. Okay, bonds up, right? Tends to be when bonds down, stocks down. Tends to be when TLT up, stocks up. And it's following that today. We got TLT closing above that 20-day moving average. Look at this. Finally, look at that. Boom. Man, I was waiting for that. I started thinking it wasn't going to happen. I started thinking it might grind sideways out of it, but no. We do have this, like, you see it right in here. I wish this flipping crosshair, I wish I could take that off so I could just circle that. I pointed out that little W there before, and we see this little congestion right in this area. So I think we got this area right in here. Right around, I don't know the exact price range, but it's somewhere around this price range of somewhere between 390 to possibly like 380 to 390, somewhere in there, that range. Maybe it's a little more, but it seems like that is a bit of a sticky place. So that and this one seems to be like kind of that new bottom, right? Your potentially favorite number, 357, and see it rallied up, pulled back a little bit, boom, shot up here. Now the big question, is it going to stay out? That's what we've been wanting to see, right? Is it going to stay out? It's got to stay out of this channel in order to reverse that trend, and it might take, maybe it'll take a minute to figure it out. Maybe it won't, but I think the midterm elections may be done. As I mentioned, I've basically been not completely comatose, but I definitely was not using any mental functioning because I was sleeping a lot. So I wasn't really paying attention to what was going on. Just basically sleeping. And now that I seem to be waking up from our Rip Van Winkle state, then getting back into this old stock market game. And so look to see what happens there. But what about my beloved oil? What has been happening with oil? Look at that. Man, drop back down. Up here. It's still in this range though, right? We've been range bound. I hope you can see it, man. It's like we got this top right here. This is like a real wide range, right? Bottom here, and then we can kind of go somewhere in there, right? And then it's like starts kind of narrowing in, but sort of like this range right here. It's staying in here. It was above that 200-day moving average and couldn't stay above that 200-day moving average. I would drop below the 50-day moving average. So it'd be interesting to see what's going to happen with that. I'm guessing though. I'm guessing it's going to stay. I'm just taking a wild guess. I mean, this is I could potentially see it falling below this 76, but I'm thinking kind of more in here. I think it's going to stay above that somewhere in this kind of range. If it falls down, maybe get caught around this low 80s. But oil, look at it, it's real volatile. Right? We're looking at daily candles here. Look at how much it moves sometimes in a day. How much it moved down here, rallied back up. But we got a high, a lower high. Kind of the same, right? Not a lower high. Why we also have we did have that low, the low, lower low, lower low, but now we got that low, higher low, little bit of a higher low. So yeah, I think maybe it's going to be squeezing, potentially kind of squeezing up like this, and maybe sideways like this, and as it keeps coming in kind of like a wedge flat on top, maybe it's going to push those prices to the upside. Oil is another one where there's a lot of moving parts going on with it. There's the futures market, which is what we're looking at here. Someone could come in, someone like who? I don't know. Maybe someone like you. Maybe you decide you want to dump. Maybe you decide you want the price of oil to go down. So you short, you sell. Let's say I don't know, 10 million futures contracts. That's going to push the price down. And then there's OPEC, and then there's like wars, but wars aren't pushing this up right now. So there's all these different things that could happen. Remember that boat that got caught in the Suez Canal? That skyrocketed the price of oil up a little bit. How about when people start bombing on oil factories? Sometimes that makes the price of oil go up. So it's real volatile, but it seems like it's going to be staying in this range a bit. GOLD. Well, hot diggity. Look at that. It has gone up. Look at that. It's kind of skyrocketed up in the last couple days. Man, I slept through all this. I can't believe I slept through all this action. But you know what? I was watching this one. We'll get to that in a moment. All right, so we have this basically triple bottom here. We got the triple B. Bottom one, bottom two, bottom three. Up, wee. Look at that. And then it goes 1, 2, 3. These must be like this is like the snare, and these are I don't know, the big bass drum, whatever that is. I don't know. I'm just making this up at the moment. Like I said, forgive me. I'm kind of recovering from I don't know what. But I tell you what, man, I was incapacitated, whatever it was. So the problem with this is that, as I've been mentioning on these videos, I really was hoping, the gold is going down to 300, and it's going the opposite direction. I mean, 1760 is a far cry from 300. 1760 is closer to 2000 than it is to 300. And so I don't know who we need to talk to, but we need to talk to somebody, and we need to get someone with a lot of futures cash to be shorting this. Short this and drive that price down to $300 for me. The problem though is, even if they drive the paper price down to 300, doesn't mean we can necessarily buy the physical item for 300. Oh, that's the problem. There definitely seems to be a difference when it comes to the price of the futures contract and actually obtaining the material. Try it out for yourself. Let me know how it works for you as far as how close to this particular spot price do you get on any particular item. Now this one, I just happened to peek at once or twice, and I saw, I thought I could have swore I saw this down to 15,000. Let me take a look. Yeah, I looked on my cellular phone. Okay. Yahoo Finance. Yeah, we'll have to do it this way. $17. Looks like we have a discrepancy in the markets. There was a low of 16. We got a low of 16. Might have some discrepancy going on here. Let's see how I can see if we can figure this out. Week range. Okay, maybe I just happened to see this. So when was it at 15? You know, again, as I keep mentioning, you know, I was really down and out in bed. So I just glanced at it, and yeah, maybe I saw the low of the 52, but I thought that was I thought I actually saw it on the trading price of the day, but I could be wrong. I definitely could be wrong. I slept more than I was awake, and even when I was awake, I wasn't getting too much done. So it very well could be, let's say, the last 5 days. Yep. But look at that. Right there. Boom. Let's open this up. Okay, I see. We potentially have some sort of a discrepancy. What's this down to? Look at that. Yep. So I'm not sure exactly where this discrepancy is coming in at, but you see Tastyworks is putting in the low for, look over here, Tastyworks is putting the low for the Bitcoin US dollar exchange ratio to be the low of $17,214.50 for November 8th. And November 8th, Yahoo Finance is putting that same low at $15,880.78. So not sure who is accurate there, and that is totally okay, because this is what we do know. I think one of the last videos I posted was talking about Bitcoin being over 20,000. Well, we are not over 20,000 anymore. No, we're not. Oh boy, the bears. I think the bears have got to be celebrating. See, we were kind of making this sort of slow stair step down. That's not a slow stair step down. And it was kind of making a very slow stair step up, right? Where you're looking, oh wow, look at this. It went sideways for so long, and then it bumped up right here, just kind of going sideways. Boom, bumped up a little more, and I don't know. I can't remember. I just remember this one, but it looked like it bumped up here, but no. Selling pressure just really put it in. So you know, that's why I like this kind of. I think this is misleading, right? Ooh, up 14.56%. Does that look exciting green to you? Maybe they're talking about this candle here, because this is probably today's candle. But yeah, maybe it was way up here when they recorded it. Nonetheless, that's why I like looking actually at charts versus stuff like this. What is this good for? I don't know. It's just good for some introduction. I'm trying to think about how to rework these whole videos to at least these daily analysis videos to make it more more value for the video consumer. But this is pretty telling to me. We're definitely, we're way below these moving averages. So now we're gonna wait and see what happens. But this is the first thing that bulls or bears need to be looking at. So we're trading like this long drop down. Right here's the 50% roughly in the body of the candle, not including the shadow, but in the body it's about right there. So we're in the bottom kind of maybe 15, 20, I don't know, 25%, somewhere in there. Right here it was like definitely in the bottom 10, right? But we're definitely in the lower half of this candle. So how long is it going to take to make it back up to this top part? And not just make it up, but yeah, well, it's just to make it up. And then if it does make it up there, is it going to break past it? Is it going to stay out of there? That's a good distance. But you see, Bitcoin can travel some distance. But at the moment, I would say the bears, you got to be celebrating. They must be celebrating good times. And let's go back real quick and talk about some paper trades. Let's talk about some paper trades. And let's talk about paper trades on XLF, since it's like, since it's not too expensive. Okay, yeah, we can go with that. So all these are paper trades, right? I'm not a financial advisor. I don't even have the right qualifications to give myself financial advice. So this is all for entertainment and hopefully sometimes educational purposes, but do not do this in real life. Just try things in paper trading, right? Because we're going to talk about some wild things, trading on the wild side to learn, but you got to do it with paper trading. Got to do it with paper trading, so that way you can learn without risking real money. So short-term potential trade. Let's see how much risk you want to take. If you maybe looking at selling some sort of either put spreads or cash secured put down here below that 50-day moving average. That's pretty far away. And so you had to get through all this resistance. It's got to fall through there. If you want to get a little more aggressive, maybe you could come up here. Maybe you could come somewhere up here. If you want to be really aggressive, potentially you could. I wouldn't do this myself because of just it's not so much my trading style. I need things to line up a lot more. But with a paper trading account, you could potentially buy a call option to see what happens. Like I said, in a real money account, I want to do it. Not with my lifestyle and what's going on and those type of things. I feel more comfortable selling options where I have a high degree of profiting and lower degree of losing. So that's why I like the cash secured put options. If I wanted to buy at least 100 shares of this, maybe I could. Where would I? Definitely, if there was any premium, I don't know if there is. You have to check. If I had, let's say, $3,500 that I could put on this trade, secure cash secured put option down here, maybe at 32. See if there's any premium there. That seems to be low chance of assignment. Of course, it depends on how many days. So how many days to expiration. I might even look down here, in there, or maybe somewhere like right in here, considering the days. And yeah, I'll probably do that one. What about here? What are some standout trade? Kind of the same thing. Or I wouldn't. I probably wouldn't be selling anything up here, even though it might take some extra effort, but it's like everything's moving up right now. So me personally, I'd probably practice some same thing, some stuff down here. But hey, it's paper trading, right? You want to see what happens? Put it on so you can see what happens and see if it moves against you, see if it's worth the risk. But again, it's got to be paper trading, right? You don't this is an expensive stock, so anytime you're doing, if you're going to potentially be selling selling cash secured put options on that, you need a grip of money in your account. So you better stick with that paper trading. Even if you're just doing spreads, you can lose a pretty sizable chunk of money. So lose that paper money, lose that simulated money, so you can learn. Let's see if anything really stands out. Oh, maybe maybe below here, definitely kind of below here. This one seems real safe, below 129, or maybe right at 129. You want to be really, really safe, you can go all the way down here. I don't know if you can get any money out of that though. What else? I do a lot of selling put options, and then once I get assigned, I start selling covered call options. So my eyes kind of trained to look for where I might feel comfortable selling put options at, and I'm selling cash secured put options. So I'm okay normally with taking less premium and then getting a better deal if the stock falls down generally. But sometimes, just 2 weeks ago, I sold, not on this equity, but I sold a put option, a 4-day put option, really close to the money, and I got a fat premium check, and I got assigned afterwards. So I was happy to take on these shares of a particular stock, and yeah, took on those shares. Already had some of those stocks, so adding to my position, and I will continue to add to that position. So you want to learn a bit more about how I'm trading my bread and butter type of strategy, which is selling cash secured put options on stocks that I'm comfortable owning the rest of my life if I had to. Sometimes I want to own them the rest of my life. Just depends what the situation is, but it's like, to me, it feels like a level of protection. I can sell these cash secured put options on a stock that, kind of like at expiration date, my worst case scenario is I buy the stock and keep the premium. I mean, that seems like a pretty good deal to me. It's kind of hard to lose money unless the company goes bankrupt, versus selling a credit spread. It's like I make money or lose money. Yeah, I get it, there might be a break even, but it seems like anytime I'm selling credit spreads, it doesn't really end in that break even very often. It seems like it's a lose money or make money. So I like this idea of not losing money at expiration date, regardless of what happens. So I buy that, sell that cash secured put option. Come expiration, if it expires worthless, that's great. I took the premium, I'll resell the put option. If it does not expire worthless, I have the cash to buy the stock. And then normally the stocks that I'm selling these on give a pretty nice dividend, so I start collecting those dividends, and then potentially start selling cash secured, covered calls against them. And depending on what that stock is and how it fits into my portfolio will determine what I do from there. But get these. I'm usually sending something out 6 days a week, unless I somehow get zapped with some sort of thing that's having me sleep for a few days. That is not normal for me, ladies and gentlemen. So download this stuff, and you guys have a fantastic day. Bye bye.